Bosh! Welcome, I'm TradeX, this is my trading den, and today we're going to talk about everything there is to know about PD arrays, okay? So we're going to talk about what they are, but more importantly, how I specifically use them to take entries and exits, so you guys can become more profitable, more consistently. Let's get straight into it. Guys, before we jump into this, what I want to make sure you've done is head over to my ICT series and watch my episode on forming directional bias. This is going to help you understand how to use PD arrays effectively and give you the best opportunity to be able to start implementing this in your trades. If you haven't already watched that episode, I'll put a comment card in the top right hand corner for you to go and check it now. So pause this video right here and watch that, and I'll also put a clip at the end so you could then just jump straight back into this video. But for those of you who have seen that video, let's jump straight into it. And we're going to start with what are they, and then we're going to jump into understanding how they work on higher time frames. Then we're going to look at how I use them for entries and exits, and then I'll hint at time and price, which will be in the episode I'll be doing later in the week. Okay, now let's start with what they are. Okay, what are they? They are put incredibly simply an order of merit on where price is reaching to when moving through to either a premium or a discount of a range. Now, I just want to stop here and clarify this point. It's really, really important that we understand how to frame directional bias before we start looking into how to use PD array matrix analysis to decide where price is moving to. You can't have one or the other. You have to have both, right? You have to have a sound understanding of both. And why do I say that? It's because price is only doing one of two things, all right? It is only either running to liquidity above an old high or an old low, or it's searching to rebalance an imbalance within inside of a range. Okay, we therefore need to understand where price is within a wider dealing range and understanding where price is drawing to. If we can understand that we're in a discount or a premium, we can then start using PD array matrix to decide where price is likely to move to or from. Okay, now this all sounds a little bit complex. Chill out, right? Just chill, because we're going to go through an entire session today on charts live, breaking it down from higher time frame all the way down to an entry. So you're going to get you covered. I'm going to get you covered, right? We're doing process here, not just information, all right? They are effective on all time frames, and that's higher time frame all the way down to lower time frames. And again, I'm going to break down how I personally specifically use PD array matrix to frame my entries and exits. And then for me, they are lines in the sand. So when I'm on a lower time frame and I've already done my higher time frame analysis, I will use the PD matrix on a lower time frame as line in the sand. So we'll break through all of that again as we go through the charts example. And then finally, they are potential profit targets when you've entered a trade for where you're going to peel off partials. And this is how I use it when I am trading. So I'll join in with the market makers and I will peel off my position at low hanging fruit. All right. Now, how do I use them? Right? How do I use them? I guess that's the question you're asking, right? I personally use them in conjunction with higher time frame dealing ranges. So that boils down to that point I was talking about, having a firm understanding of forming directional bias. Okay, you can't have one without the other. It's just simple. So I use them in conjunction with higher time frame dealing ranges, and again we're going to break that down. And also in conjunction with time and price. So if you understand time and price, you understand algorithmic theory and when those algorithms are, and for those who are inside Red Pill, they will know what those price algorithm times are, because we talk about them regularly. But an example here would be a power of 3. So we all know what power of 3 is, and if you don't, there is episodes on ICT's channel about power of 3. But essentially we understand how price is likely to move throughout the day, and we can therefore marry that up with the PD array matrix to understand where price is likely to move off from in opening or closing of daily ranges. And finally, probably one of the most important points for me, and isn't widely taught, and it's that price is likely to stay within a range. Okay, and so what I mean by that is a higher time frame range. Okay, so price is going to move and oscillate between a discount and a premium and a discount until there is a higher impact news event, and that higher impact news event will drive us through the dealing range, high or low, depending if it's wanting to search for a higher time frame PD array or premium. Okay, So if there's no high impact news event, we're likely to stay within inside a dealing range and move between premium discount and discount and premium. Okay. However, high impact news event comes along, FOMC, CPI, that is likely to drive us through into a new higher time frame premium or discount, and we can start looking at PDRA matrix on a higher time frame in a wider dealing range. That is going to cover everything in the slides. We're now going to jump into the charts and do a live example from top right down to the bottom. So I'll see you in the live charts. Right, guys, we're in the charts, okay? So we're going to break down top to bottom how I use PDRAs in conjunction with higher time frame analysis, because as I mentioned previously, you can't have one without the other. Okay, let's start with the monthly, and we're going to look at the yearly high and yearly low, and then we're going to go down onto lower time frames until we can start peeling off our entries using PD arrays. Okay, let's start with the monthly to get an indication where we currently sit, because what we want to find out is where price is likely to head, right? This is a game of probability. So is it moving from a premium to a discount, or is it moving from a discount to a premium? Now, if we look at this monthly range, this is quite clearly monthly discount, right? This is a monthly discount. Why is this a monthly discount? Because it is below equilibrium. Apologies for my typing there, I've got a typo in there. So everything above equilibrium is considered a premium. All right, so we are technically in a discount of the yearly range. Okay, so anything above this line would be considered a premium. All right, let's jump down onto the daily chart, and this is where we start to frame context. We now know that we're inside a monthly discount, and we have a premium line here at 51.50. All right, now let's see where we sit on the daily. So we're now looking at the daily dealing range, and the dealing range is essentially where price is oscillating in between premium and discount. Okay, and you can clearly see that we are in equilibrium of the daily range. So this is the daily dealing range. We have the high up here. Okay, that's the dealing range high, and we have the dealing range low on the daily, and we are inside equilibrium. So we'll mark this up as equilibrium for the purposes of this video, right? Equilibrium. All right, we can get rid of this now. Now, what have we got so far? Just from very, very simple analysis, which took 30 seconds, right? We know we're in a discount of a monthly range. We know that we're inside equilibrium of the daily range. Where are we likely to see price draw up into? Up into a premium. We're expecting it to move higher, okay? And until price breaks through this high or this low, this is the current dealing range that we're working within. All right, and so this goes back to October last year all the way up to February this year, and until price punches through, this is the dealing range. All right, we have dealing range on lower time frames, but this is the wider context, higher time frame dealing range that we're working inside. All right, now we understand that, we can jump down onto the hourly chart. All right, and what do we have on the hourly chart? We know that this line here, this blue shaded box, is equilibrium of that daily range. We also know that we're inside a discount of the monthly range, okay? And we're expecting price to move where? Higher, right? So this is where we're looking at time and price. What time are we at here? We're at midnight, okay? And we're looking for price to run lower to pick up entries for price to move higher. Why? Because we are expecting price to run lower, having reached a premium yesterday. Right, we were in a premium yesterday. So if price is looking to run lower, we would be looking at places where to take entries long. Why? Because our macro is bullish in this instance. So all through this, I'm doing nothing until I see price come down to what? What is our lowest line in the sand, as I call it, PD array before price would need to crash through to go down into a deeper discount? A mitigation block, right? A mitigation block. And what do we have here on the hourly? We have a mitigation block. We have a low, a high, fail, swing low, breakaway. What is price likely to run back into? And and test at least before running down into a deeper discount. If it were to go into a deeper discount, what would it have to break through? A mitigation block. It would have to go through this line. If I am macro bullish, why would I believe it's going to go through this mitigation block if I believe price is going to move higher? Okay? Alarm bells should be ringing. This is where you start taking notes, guys. We are at equilibrium. Okay? There's no reason for price to drive lower. Okay? If the macro is bullish. Now, let's play price forward and see what happens. Moves down. What time is all of this? This is Asia and London session. Bingo. What are we in? What are we in? We're inside that mitigation block. Now, this is where I would be looking for entries on a lower time frame. Okay? This is where I'd be looking for entries on a lower time frame. For the context of this right now, I want to use this as a range that we're working inside. Okay? A range that we're working inside. Okay? Because we're just going to capitalize on this day. We're just going to use this day as an example. So our low-hanging fruit, right? Our low-hanging fruit would be this high, right? This old high here. In order to enter here and get out at this high, or at least target this high, look at the range. It's over 70 handles. You do not need to be trading more than 70 handles to make a successful trade. You know, your goal when you're new is to take 5 handles, right? And we are looking inside of this range here for our PDRA matrix for price to run through. It's really that simple. We got in at a mitigation block on a higher time frame. What do we have on a higher time frame that price could be drawn up into here? Let's drop down. So now we're on a 5-minute chart, okay, but it's framed on the context on a higher time frame. The higher time frame is this hourly SIBI, and we've got this old high which is at equilibrium of the range, okay. We know that price is likely to run from a discount to a premium, okay, and we know the mitigation block is the line in the sand, right? So this mitigation block on the hourly, we're now looking for confluences on the lower time frame to search for PDRAs to take our entries, because we've now got an order block here. For it to punch through an order block, there's nothing below this before it goes through the mitigation block on that hourly. So this is the line in the sand inside of a line in the sand, right? Let's talk about inception. Now all we have to do is once we take our entry, we're looking for price to run up into a premium. So we're targeting that SIBI on the higher time frame. Now what I do is I then look for targets within inside this range of PDRAs of which price might find resistance to, or where I want to start paying the trader. So we can see we have this SIBI, sell side imbalance, buy side efficiency above this high but below this low, okay? We can also see that we have a mitigation block here, right? We can see that we have another SIBI here. So all of this is now, all I'm doing is I'm framing my exits by using the PD matrix. But ultimately, the entire draw is using the PD matrix to run up into a higher time frame. This is the high which I'm being drawn to. This SIBI is a liquidity void that price is running to, okay? The order block that we'll be searching for is non-existent in this trade. We are searching for that liquidity that is below or at equilibrium of that higher time frame range, okay? That higher time frame range. That is the draw. Everything in between here is just noise, okay? So let's see what happens. Price comes down at the open, hits the order block inside the hourly mitigation block. The line in the sand, now price is doing what? It's driving up into a premium, and so we're using PDRAs to partial off our targets. There you go, hits. Hits that 1 hour SIBI, what we're waiting for it to draw up into, bingo. Right, what have we now hit? We are now in technically a premium. We are now in a premium. But you don't need to worry about that because you've now taken your 70 handles. You have taken the old high. You've gone through your full stretch using the PDA matrix. You've gone off, you've come out of a higher time frame mitigation block. You've run through the liquidity void. You've gone through the order block. There was no rejection block and you've taken the old high. Trade done. And you've moved into a premium. Okay, you've moved into a premium. So all you're doing now is you're watching price to see what it wants to do and see if it wants to show signs of continuation or show signs that it wants to reverse, okay? So now we're just going to sit here on the 5 minute, see what happens, what time we're in. We're actually in lunches. What are we likely to get during lunch? Consolidation. Price drives up, and what has it finally reached? What did it finally reach? It reached the premium of that range. the premium of the range on the hourly that we spoke about before. Okay, this is using the PD matrix to enter trades and then allow price to move up into a premium or a discount depending on which bias has been formed. Okay, now we're going to jump back into the 5 minute and let's play this out. So now we're in the premium. What are we expecting price to do? What we're expecting price to do? Run back to a discount, right? Run back because that's all it's doing. It's either taking buy side or sell side liquidity, or it's rebalancing an imbalance. Well, guys, it's already taken highs here. It's taken these relative equal highs and it's run up into a premium. Okay, so what are we now framing and waiting and sitting patiently for? We're looking for price to return in the opposite direction. We're looking for price to now run and rebalance this price leg. Okay, back down into a discount of this price leg. What did we have form up here which could have framed your entry? Mitigation block, right? There's your mitigation block. The high, the low, the failed swing high broken through. This is your mitigation block. That is your line in the sand. Where is that mitigation block forming? It's forming inside of a premium of that higher time frame. Where is price likely to draw back into? This discount range of this displacement leg. Okay, so now all we're doing is we're peeling off partials on this way down. But our first target would be equilibrium, right? Equilibrium of this range, because that is discount below that equilibrium line. And you can see that price ultimately fulfilled its objective by reaching this OTE zone of this displacement leg. So guys, that's going to be absolutely everything there is to know today about PD arrays and how I use them in combination with higher time frame analysis. So until next time guys, trade safe, trade smart. And if you did find value in this video, please do consider smashing like and subscribe. It does the channel a world of good and it helps other traders like yourselves to view this content. So I'll see you on the other side guys. Take care.